Today's episode is from our recent BMO Global Reserve and Asset Management Conference, where we sat down for a timely conversation on how AI is moving from experimentation to real-world application across financial markets. Matthew Goddard, Global Head of ETFs and Futures Trading for BMO Capital Markets, leads a discussion with the following panelists: Armando Benitez, Managing Director, Head of AI and Chief Data and Analytics Officer for BMO Capital Markets, and Baiju Devani, Chief AI Officer at TMX Group, CTO of Armilla AI at the time of recording. Let's dive in.
Welcome to Markets Plus, where leading experts from across BMO discuss factors shaping the markets, economy, industry sectors, and much more. Visit bmocm.com/markets plus for more episodes.
AI is not optional. That decision has already been made by the market. We see it. It's already inside most of our institutions. It's in the way capital moves, it's in the way risk is taken, and it's in the way edge is created. Most large firms already have AI in production. That's not the edge. The advantage is knowing exactly what you've built, what it does, and what to do when things go wrong. In this business, winning doesn't mean winning or being right all the time. It means understanding failure, containing it, and staying in control when others do not. AI will create enormous advantage. It already has. But only for institutions that demand clarity, control, and resilience from day one. For everyone else, you'll get speed without confidence, scale without understanding, and a risk that quietly compounds until it doesn't. Today is about building AI with a durable advantage. Now, I'm really excited to moderate this panel today, and one of the reasons is, I go back with some of the members a long time, and this is an area that is so hyped. And so I'm going to do something I don't usually do, which is literally read off credentials, because with everyone becoming an AI expert overnight, it really matters. We have Armando Benitez. Armando leads the teams responsible for translating AI into real production-grade capabilities across markets. His background spans research institutions like CERN and Fermilab, and working its way through the financial markets with a focus on making complex ideas work in the real world. Baiju Devani. He brings deep experience across banking, insurance, and regulation, including serving as CDAO at Aviva, head of AI at Layer 6 and TD Group, and before that, director of analytics at CIRO, Canada's investment industry regulator. So in short, I do not know who will win the game of chess, but we're covered today. So we have a lot of content. We want to go through a couple of themes. So let's kick this off. And Armando and Baiju, this is for both of you. And Armando, let's start with you. The theme here is what is actually changing decisions. So 2 questions in one. What are you building today that is changing decisions? And where have you seen tangible, measurable impact?
Yeah, thank you, Matt. And things are changing rapidly. That's an understatement. And we started simple. We started giving access to conversational interfaces, so think pilots, ChatGPT, and many others. Then we started putting knowledge bases exposed to those AIs that really allow people to answer questions fast. Now, did that change behavior? Yes, but that was just the beginning. We're moving now towards more complex workflows where we're working together with bankers to identify opportunities where they can focus on the client interaction rather than any of the manual process that doesn't add much value. So how we see it is we're bringing people up the value chain. And that is changing how our teams are interacting with clients and how they're consuming information. And as we continue this journey, we started moving into more complex workflows. That is understanding how communication with clients ultimately tell us how we can serve them better. Say, if we're looking at it from the perspective of coverage, one individual has a very good idea about how that one client is interacting with the bank, but not in a holistic perspective. And that is what is changing today, thanks to AI. So over time, those decisions become more consistent and it's no longer about who's on the desk or who has the information on their brain, but that gets shared across the organization. The other piece where I've seen change is on the education piece. We are investing heavily on AI, and that goes across the industry. But we want to make sure that investment goes a long way. So with that, we have created different modules for people to self-learn, workshops, and many others. I've been using the analogy of the piano. If I were to give a piano to everybody, it won't make you a pianist. Maybe some of you are. But the same thing happens with AI. You have to go through the work. You have to do the scales. And eventually, through repetition and practice, you're going to play beautiful symphonies. Same thing with AI. We've been asking people to do at least one thing a day with AI and use AI as a learning tool. If you don't know how to do something, ask AI. And the test that I've been using to measure impact is if I were to remove the system today, would it be missed?
Yeah, thank you, first of all, Matt and Armando, for this panel, and BMO for the amazing conference as well. To answer your first question in terms of what I'm doing right now that I think is fundamental to AI adoption is really what we're building a mechanism to drive AI adoption. So the investments that Armando are talking about actually makes it to production by managing, measuring, and pricing the risk of AI. AI, like technologies before it, comes with a lot of good, but also does come with risks. And when people are focused on risk, they don't adopt the technology as fast as they would otherwise. And so what we're building is really an infrastructure layer, a marketplace essentially, a mechanism by which we can price and underwrite risk, AI risk specifically, and get it off the balance sheet in the form of insurance. Now, this is not new. If you've looked at cloud and the digital revolution that we just went through, no one bought cyber insurance 20 years ago. Today, everyone buys cyber insurance. That's a $30 billion market just in North America. And we are sure that's what's going to happen to AI as well. So by putting a price on that risk, we're able to create a market and pass out that risk. Now, why is it important? Because from where I sit, and I've been in capital markets for a long time before I started doing this, and first as an algorithmic market maker, and then as building the surveillance capabilities for Canada. And I haven't seen the adoption pick up as fast as it has in the last 2-3 years. Everyone is adopting AI. It is a secular trend. It's not just one industry, one category. It truly is secular across our economy. But for that to really work out, we need to build this sort of infrastructure, and insurance is infrastructure for risk, really is the way I see it, and that's what we're focused on building. In terms of the second part of your question, where I see greatest impact, I've seen AI for the last 25 years. It's been an upward trend. We have AI today, or we've always had AI in places where we don't really observe it, in, let's say, pricing. Capital markets had the first agentic AI system, right? 80% of equity flows are algorithmic. Most of the market makers are algorithmic. Those are agents. They are completely autonomous. They might be using different sorts of AI and different sorts of logic to accomplish what they're doing. But hey, we've always had AI in our sort of environments. But now, with the language breakthroughs and the capability breakthroughs around language, I'm seeing adoption in areas that we did not see otherwise, which is the machine-to-human interactions, whether that's you're a wealth advisor, whether you are a telecommunication companies, those places where I'm trying to see impact that I did not see before. So that's exciting.
Yeah, we see this every day in the stuff we're doing on the market making
Right.
side. So moving on, theme 2 here, trust as an enabler. Baiju, let's continue on this theme here. So what does trust mean in practice once systems are live?
Yeah, and so it's a great question. And trust is not a feeling, right, when it comes to AI. Trust is understanding the system that you're implementing or you're adopting in the context in which you're adopting it. It is understanding design choices that you have to make. If you are developing that system, the best practices. If you're just buying and deploying that system, the best practices and standards around AI deployment. It is about making sure the right guardrails are in place. It's about making sure that you have some level of monitoring in place. And it's not a one and done thing. It is a continuous cycle. And again, when you think about AI at scale, in production, in places that matter, then those things become really important. That is what engenders trust. And it's not one thing, it's not a one and done, and it's a continuous cycle of all of those things. So I think a level of governance around AI is really important. And then a level of understanding of what you're doing is really critical as well.
Love that. So now we want to shift this to something we all see in our business, and this is the holy grail, differentiating signal from noise. So this is the theme. And Armando, let's start with you. So for value creation, this is always coming down to value. What foundations matter the most? Data, product, ownership, the operating model, or talent? Are any of these underestimated?
Yeah, good question. I think that the main focus should be where the business is growing, regardless of what you're building. And regarding those four foundations, data quality, product ownership, operating model, and talent, I think they're all very important. If one is missing, you cannot get anything done. Data matter, but it's not enough. You have to have proper ownership, not only just good data. And so from that perspective, the product ownership is key. Understanding who owns the outcome, not just building tools, but ultimately driving the usage and impact of whatever you're building. And out of those four, to me, the one that is the more underestimated is the operating models. It's easy to create prototypes these days. Baiju and I often talk about the application we built over the weekend. It works well, but I don't know if we'll scale. And so that is where I think a lot of the focus is going to be happening in the next little while, where people, yes, can get to a prototype really quickly, but you need to move out of the sandbox and scale with proper engineering teams. So really, we're not having a tech problem, but more of a focus and execution problem.
We always talk about execution, implementation. So Baiju, over to you. Where do firms create risk by moving too fast, one, and on the other spectrum, over-engineering governance too early?
Yeah, and I think the irony is that both of those extreme ends get you to the same spot, which is that you never get past the POC stage. You move too fast, I think someone is going to stop you, whether that's your compliance team, whether that's the board, whether that's just something unexpected happening in the system and taking you back 2 years reputationally and from a credibility point of view. So I think that moving fast is important. Moving too fast and finding that balance is really where the trick is. On the flip side, I think I've often seen organizations which are too focused on setting exactly the perfect governance framework. And the train never leaves the station, because people like Armando would be like, well, there are places I can go where I can actually build stuff at scale much faster. I think the trick in finding that balance is that not to view governance as a speed bump, as a gated function, but to really flip the question and say, okay, we're trying to do X, whatever that X is, and we're trying to build a system through AI. AI is here, the capabilities are here. What are the risks? Think from first principle. What are the risks that you're trying to manage? And then ask the question, how do we do it safely? And it's a minor reframing of the same thing, but I think it gets your risk managers in the right spot. I think you as a developer of AI or as a leader of AI, it gets you in the right mindset as well of how do we make it happen? Because, I mean, we are risk takers. That's how we make a living. And it's not about not taking risks, it's about managing those risks, right? So when you kind of frame it that way, you find that right balance between too much governance or too little governance, I would say.
So let's keep going with this, Baiju. So which AI initiatives consume too much executive attention, but never compound into real value?
I'll be a bit controversial. I'd say the stuff that is shiny new object, the shiny new object syndrome. Executives are going to come in. AI, as you've said, is a bit of a hype cycle right now. Everyone wants AI, and you pick the shiniest use case out there and be like, that's it. And then that usually doesn't end well. I think where compounding really happens is a couple of different things. First, understand from a leadership point of view that you need a multi-year strategy. You would need to invest in capabilities like engineering, governance, whatever that might be. There's a mix of things that you have to bring. And that's not an easy one to just say, we're just going to make money available, and so we'll just build it right away. It is going to have a multi-year horizon. You have to gate the investment, you have to measure the investment, and then you have to course correct over those years as well. And that really compounds. And then when you find a good leverage spot in your business to say, this is where we can make an impact, not just efficiency gains, which are critical, but still where you can actually find use cases where you can, have a non-linear effect on your business, I think that's becomes really exciting. So I kind of look at it as there's a lot of people here who allocate capital and just look at it as how you do capital allocation. You would stage it, you would measure it, you would have accountability that is not rotating with a new leader, suddenly a new strategy, suddenly a new rethink. Just see it through, and then that's when the compounding actually happens.
With you, slow and steady. Armando, what decisions, and this is something that's very relevant to conversations we have, what decisions should never be outsourced regardless of a vendor quality?
I think you should never outsource anything that relates to your IP and would make your business unique. Everything else is fair game. The space is changing very rapidly. So things like access to models, the ecosystem around it, that today is considered table stakes. That is a given. You don't have to spend time on it. But where you really need to spend time is identifying priorities, business alignment, and that is what make each one of our business unique. And that is the piece that I will never outsource.
Are agentic autonomous systems real signal for high consequence decisions, or is there still noise?
I can go first. I think it's still noise right now in most of the places that I hear about. And I'm talking specifically about agentic systems, which is the way I would define it is you string together a bunch of AIs, give it some tools, and give it autonomy to sort of iterate over a solution space or a problem space, I would say. So with that definition, I think there's a lot of noise in their market. That's not to say that it's all hype as well. So where it really works well are in verifiable tasks, where it is that the AI system itself is able to verify the solutions that it puts forward. So the most easiest one to imagine that is in coding, in programming, where you can enumerate over end solutions and the AI is able to execute that code and say, well, yeah, I got the output that I was looking for, and then just keep on iterating over it. But for most of what we have today as problem space is it's the verifiability and evaluation of a solution is really hard. So this is why I think there's a lot of noise there. That's not to say it's not going to get there. Almost working, most of the time working, 90% of the time working, almost reliable is not going to be good enough because most of what you do, you're focused on the tail risk, not all of the time it works, right? And so I think there's a fair bit of governance, evaluation techniques, a bit of capability leaps as well that needs to happen.
I would say, yeah, completely agree. And one additional angle is depends where you are in the maturity journey of your AI and technology for that matter. So yes, certainly I've seen a lot of noise and smoke and mirrors, but that conversation is changing. Conversations that I had with vendors 2 years ago is not the same what I have today. And those frameworks that mentioned regarding data governance, quality control, repeatability are improving. Conversations that I mentioned 2 years, but really even 4 months ago, nobody was talking at the same level that we talk today about things like vibe coding, which is how do you code with just simple English, or how do you automate some of the daily tasks with things like co-work and many other applications. So yes, there's a lot of noise, but also depends where you are.
Well, you're making me think of the point where we're trusting these agents to do super genius things, and they do on the periphery. And so a video you sent me recently, Andre Karpathy, and I tested this before he got here. If you go to Copilot or Claude and say, I live 50 meters from a car wash, should I walk or drive there? It will tell you why you should walk there. So we have to think about this. Okay, so moving on, I think we're doing well for time here, but let's talk about pilot to production. So Armando first, Baiju next. Many firms get to pilot, very few to production. What do we have to do?
It's similar to what I said earlier, right? Easy to get to the pilot, but then you have to scale. And how do you scale is you have a right team of engineers behind the scenes that ultimately are going to take that application and make it real, put the proper guardrails in place. And so with that in mind, you should not start building applications without considering scale. Scale today is not negotiable because, again, it's easy to make it work for one use case, but then when you think about the volumes of transactions, the type of risk that we have to deal with in a day-to-day, the scale is non-negotiable. So, and if you can, then bring the right partners. Today, the frontier labs, so Anthropic, OpenAI, and many others, are coming up with a model that they call forward deployment engineer. Nothing new really, but you can think of it as staff augmentation, helps you get started, teach your staff how to work with AI at scale, and eventually own the solution from there on.
Yeah, I mean, it's all of the above, I think. The only thing I would add is a couple of things, right? Like you have a lot of problems in math and physics where initial conditions matter a lot in terms of whether you get to the right end state or not. And in this case, the initial conditions that I would flag is, again, going back to, do you really want to do it? Do you have the strategy in place? It's so easy for senior executives to say, yeah, just do the POC. It's like inferring the problem a little bit, right? Like, I don't know what to do. I'm not so sure I have the money for the scaled out version. I don't even know if it's the right thing. But yeah, have some smart guys go work in a corner and do a POC, right? So the initial conditions of making sure, hey, do you really, like, is this part of the strategic kind of framework that we've set out to do? Is it important for our business? If all those answers are yes, then you'll find a way to how do you go from POC, how do you bring in additional capabilities, how do you bring the governance to kind of really scale it. But if you haven't thought through it, then what ends up happening is just get stuck in the POC stage, right? So I think that those initial conditions are important. The other thing is it's even more, it has always been important, but it's even more important today that you bring your domain experts in that sausage making very early on. Because right now, the company I'm building today, I need a third of the engineers that I needed even 2 years ago. And the reason is that your domain experts with prompts will be your AI engineers, your AI developers. That's just the world is changing in front of our eyes. So I think getting that domain expertise in early is really critical. That gets you the right buy-in, that kind of frames the problem the right way as well.
So the question that keeps coming up, the late mover question, is it too late? So again, open mic here, but is it too late? What advantages do late movers still have? And for both of you, if you were starting over today, what would you do differently?
Yeah, I don't think it's too late, and the right time to plant the AI tree was 2 years ago. The second best time is today. And starting today is actually easier. The tools are better. The ecosystem has grown. So you don't have to build everything from scratch. That's a huge advantage. And you can start moving from laggard to a fast follower. And that is possible today. But that requires investment. We mentioned data infrastructure, technology, governance, controls. And if I were to start today, I will make sure that I remain very focused. There is a lot of distractions, a lot of options. So that will be my main focus. And don't overthink the very first step. The best is just to get going and focus on the right use cases.
Yeah, I agree. I think it's not too late. But what you do see is the gap between the leaders and the laggard is really expanding fast. There's an AI index that is now exists for Canadian, global banks, as an example, and insurance companies. And if you track that data, they've been doing that for the last, I think, 4 years. And if you track that data, and they use a whole bunch of factors from what the public stance is, whether you've created chief AI officer positions, investments being made, et cetera, across all of those dimensions, what you see is the leaders have doubled down, have started early and doubled down, and the laggards are just trying to play catch up, right? So the difference between 1, 2, and 3 and number 4 is so wide, right? And forget the 10th or 11th or 12th, right? So I think that there is a bit of, I'd say, urgency to get strategy and your act together in terms of getting onto that. But then to Armando's point, there is a lot of advantages. You don't make the mistakes that maybe you would have made 2 or 3 years ago. The tooling is better. As I kind of mentioned, the biggest thing is that I kind of see this transformation where roles are very mutable now. They're very immutable roles where you had to be like, you're an engineer, you're an AI developer, you're a domain expert, and you're a risk governance person, and then try to bring together those cross-functional teams. Well, it's much easier now just because of where the technology is at. So I think there's a lot of advantages as well to try to leapfrog.
Move fast in a winner-takes-all economy. Yeah. Awesome. So in closing, AI is moving fast. It will separate firms, and it already is. But it's not by ambition. Discipline, control, and understanding. There's a gap. We can close that gap. Thank you.
Thank you. Thank you, Matt.
Thanks for listening. You can follow this podcast on Apple Podcasts, Spotify, or your favorite podcast app. For more episodes, visit bmocm.com/marketsplus.
The views expressed here are those of the participants and may not necessarily represent those of BMO Capital Markets, its affiliates, or subsidiaries.
For BMO disclosures, please visit bmocm.com/podcast/disclaimer.